So now I wanted to get to a topic that has come up recently, and that's about markets searching for a direction. What's the next catalyst to take the markets higher? And I guess up until now, it's been a lot of the catalyst has been the Federal Reserve and interest rates. And let's put up actually our first chart on the S&P 500, and you can see here that how well the S&P 500 has done. This is a 3-month chart, and you can see we've had some ups and downs. Coincidentally, we've seen a down beginning of August and another down point in the beginning of September. And many were wondering if we're going to see the same, markets sell off a little bit beginning of October. It would be 3 months in a row. Usually this time of year, August, September, beginning or halfway through October, you tend to see, from a seasonal standpoint, weakness in the markets. But this year hasn't been that way. A lot of people were fearful coming into September that we would see the markets sell off. And we talked about this on our show and my radio show on 1010 News Talk Radio. We talked about seasonality quite a bit, and that just did not happen. And that's why, for all of you watching today, you just can't sell everything you own or sell a bunch of the investments that you own coming into end of August to buy them back at the end of October. It just doesn't work that way all the time. And this year actually shows us this. But where is the next catalyst going to come? And as I said, for up until now, it's been something of the Fed's doing, right? Fed cutting rates, talking about cutting rates. And that has been the catalyst for markets moving higher, as we can see here. But overall, we go to our next chart here about the dot plots and what the Fed does. A couple times a year, the Federal Reserve puts out their expectation or their prediction, their forecast for where interest rates will be, 3, 6, 12 months, a few years out. And you could clearly see here that the dot plots are actually moving downward. 2024, which is your first grouping of dots, you can see that the Fed is expecting to see at least one more rate cut of 25 basis points and quite possibly a second rate cut of another 25 basis points at their last meeting in December. So the market, in my opinion, has built in this interest rate expectation. So if they do cut a quarter point 2 times over the next few months, I don't think that's going to generate much in the way of a catalyst for the overall stock market. We see in our next chart here, again, the view or the expectation for Fed interest rate cuts going forward. And again, we talk about the Fed versus the Bank of Canada because we know that the stock market, the North American stock markets, the TSX, Toronto Stock Exchange, as well as New York markets, will move with the Fed, obviously, a lot more than what Bank of Canada does. And you can see here again that the expectation is for interest rates to continue to fall. So can we continue to get, a bit of a boost or a catalyst from what the Fed is going to do? I'm not so sure. And we have a quote here, actually, which kind of is a bit of a contrary, something contrary to what many of us are believing, which is that this quote by Barclays U.S. equity strategist is saying that we could see some difficulties this upcoming quarterly reports when the companies report quarterly earnings in the next couple of weeks. We could see some toughness there. The markets may see or find that the earnings aren't as good. It looks like that EPS for third quarter has been revised down nearly 5% since May. We're looking at goes on to say here in the quote that the tech industry might earnings per share growth in the tech industry might continue to decelerate, and we've seen it decelerate. It's very difficult to maintain the same growth rate that we've seen for so often on some of the names like NVIDIA and Microsoft and Meta. It's only natural and normal that, you can't maintain that growth rate. So I think many are a little bit fearful that not really going to see much of a catalyst, but we may see a bit of negativity and the market may struggle in the month of October. So where is the next catalyst going to come? In my opinion, I think it's going to come from corporate earnings. And the hope is that this quote that was made by the U.S. equity strategist won't be correct. It will not be correct. And that we will see good earnings by U.S. businesses, by Canadian businesses. We kick off the earnings season in a couple of weeks with the big banks reporting. And the hope is that earnings season will be strong once again, with the economy growing in the US at around 3% right now. And the expectation is for US economy to continue to grow at the 2-3% clip, that we're going to continue to see businesses do well, big business in particular. So I guess we have a bit of a lack or a bit of a lull here, lack of a catalyst for now. And that's why maybe the markets are kind of moving sideways, moving up a little bit over the last couple of months, but mostly sideways. And again, that's because I think a lot of what we've seen in the past has built in. And now all eyes are on the next corporate earnings season.